Good morning, everybody. Bitcoin has done absolutely nothing since we left it. Just gonna plug in my phone real quick. My phone died overnight, so it didn't wake me up this morning. So I've got nothing done yet. What we have. Let's see here. So Bitcoin had this head and shoulders posture. We came up, came back down, hit our head off the sell wall, came back down. We had the bounce. And we spoke about the possibility of a head and shoulders. We had the break of our low. What's up, Trip? How you doing, man? We had a great day so far. Unless your day just started just like mine. Then I hope the rest of your day is good. Sterling, what's up, man? It's so nice out. Cool wind. Yeah. Constantine, how you doing, bro? Hope you're killing it, man. We had a bearish change of character on the 15-minute and the hourly. It was induced by the momentum of a head and shoulders. We broke this level. It started to flip bearish on the 15. Arguably, it started doing that here. Sorry, because we got this higher high, and then we broke this low. With this candle, became the confirmation of things flipping bearish for the 15-minute and the hourly. Let's take a peek at the hourly. Oh, that's a 4-hour. I'm like, what? That doesn't look like the 4-hour. Okay, there we go. Yeah, so this was our hourly low right here. We flip bearish. You can, when it starts to flip bearish, you can start pulling your fibs from your highs to your lows and see where it could retrace to. Let me just fix this once I have it plugged in. There we go. Equilibrium zone. We gotta switch it to just the regular fib levels. Yeah, it looks like we retraced to the golden pocket, hit our head. So that if you have a change of character reaction and you know it's flipping bearish, but you do not like the R&R, then you just have to sit up. You have to sit on your hands for a little bit and wait for a potential retrace into, well, at least my favorite zone is between the golden pocket and the 786, where I'd normally look for a low time frame change of character reaction. And we can see that likely happened, but we'll see. Let's go to 3-minute. Yeah, on the 3-minute, a little awkward. We did like establish a form of support off this previous high, but we never really got a proper pullback and a higher high and a break for a change of character. We didn't get the change of character occurrence until way down here. So it's up to you if you felt comfortable not to take that short using 3-minute structural high at your stop loss guard. We're coming into like a low time frame, little demand zone here. It might hold, but it's a 3-minute level, so I wouldn't count on it. But the 3-minute was a good spark to break the downtrending momentum that led us into the validation that we're likely going to hit the golden pocket level in the lower time frames. So congrats to anyone who might have sniped that. That was around like 6:30 this morning, so I understand if you were not awake, but all the European traders might have gotten it. Nice to be early. Hey, brother. Hope you're having a great day. My day just started, but it should be good. Thanks, man. Mike, how you doing? When you do TA, virtuals would be nice. Didn't realize how much it's been tanking. Yeah, I'll take a look at virtuals. I've noticed this morning briefly that a lot of alts were taking a hard hit from Bitcoin's small correction after this range. We'll take a look at some alts and see how they're doing. Bitcoin's pretty much the same state of where it was in yesterday. It's just a few things have flipped bullish on like the lower time frames, like the hourly and the 15-minute. Yeah, the 15-minute and the hourly broke bearish. So our probability of retracing to our level of interest has gotten higher. So around here, I'll be preparing for potential longs. If we breach past this, we lose this momentum right here. That's been holding us up for quite a while. This is momentum that's been lasting. It's April 9th, just buyer's momentum. We had a good aggressive bounce off of it. So far, we could potentially just come down and give us an ascending kind of double bottom reaction, similar to what we saw here, but more macro, and bounce off the uptrending point of interest. But we can look at the order books to find out if that's even valid or viable. We can't stop the market orders, of course, but we can track to see what the limit orders are doing. So here we do have a little tiny buy wall at 113,300. For the amount of about not even, about 150 Bitcoin roughly. So 113,300. So let's move this sell wall because it's no longer a sell wall there anymore. Let's change the coordinates. 150 Bitcoin. And we're going to change this to buy wall. Coordinates are going to be 113,300. So right now we're seeing some evidence that where the current price action is aligned with the momentum and this demand zone, there's some interest of buyers here. They could be just trying to catch the knife for this wick low, where basically where this liquidity kind of curve like ends. So we can expect a potential bounce around here, or at least for it to slow down, because 150 Bitcoin buy wall isn't very big unless the volume is super low. It's usually about one tap, and then that's all you get. 300 Bitcoin, it's usually about 1 to 2 taps. So 150 is not that much. Unless that buy wall starts to build, which is very possible as well. When people start noticing buy walls, other traders that respond to the order books start to stack their orders against it. The smarter ones undercut it a little bit. So they make sure that they get their position in. I personally wait for the reaction off of it, so I can increase my probability of being right. Okay, so we're coming down. Maybe we might SFP off this, but I'm not going to take it if we do. I want to see the low time frame, like 15-minute, hopefully change character reaction around this area. Good morning, Andrew. How you doing, man? Let's take a look at virtuals for Pluff here. Yeah, guys, same plan as pretty much yesterday. Just a matter of waiting for the price action to do what we want it to do in our key area. And if we get that price action reaction that we need, I'm going to be jumping in along around here. If we break past this, I'll be looking for structural evidence of a long down here instead. So whatever gives us that change character reaction that we love for a long at our key levels. Not every change character is important. Good morning, Ramos. How you doing? All right, let's take a peek at virtuals for Pluff. See how it's doing. He's saying he's getting his butt kicked. Virtuals. There's our. Last time we looked at was July 23rd. See, we're looking at this rising wedge with a technical target at the low here. We had a demand zone here that was basically fully mitigated, right, from our last bounce here. So we couldn't count on it too much, but we did have a bounce off it briefly before we coming down. We had it act as resistance. And then we started going to downtrend, and we lost the 200 and the 50 EMA. Are those to the day? Inputs. That one's to the day. So this one must be to the day. There we go. Yeah. So these are daily levels, daily EMAs. We broke downtrending momentum after bouncing off of this demand zone. We delete this one. It's been fully mitigated. Yeah, so this is our momentum. We broke this. We got a bit of evolving internal momentum. Basically, the pace of the sellers kind of sped up through here. And now we are range bound. Give me the same kind of vibes as Bitcoin in the lower time frames. We do have that local demand zone here, the hourly order block, and we have that more macro one that is like fully on. You just tapped into it once; it's not fully mitigated, but we could get the lower low and mitigate it some more. Let's grab. I would suggest drawing like a little triangle, rectangle here, so you don't put too much noise in your chart. Send it back. There we go. So similar to Bitcoin, kind of hoping for it to retrace its way down. Prepare for potential long down here. Relative to Bitcoin's positioning, Bitcoin would likely hit this zone first prior to virtual. So virtual might see an undercut in reaction to that. So it might not make it all the way. Let's see if we have some relative weakness in virtuals to allow it to extend down that low. But this is a good spot down here to prepare for potential longs for virtuals. That's around $1.16 or $15.98. Zoom out on the hour daily for a second. Yeah, so this solidifies our idea a little bit more the more you zoom out. We got this previous point of control, previous value high. So what kind of behavior we should be aware of, negative behavior, if we got that lower low and it ends up breaching past this low, where it gives the opportunity for us to use this value area high as resistance, we could see an extension of the target, the bearish target, down to 93.62. I'm kind of optimistic. I think we're likely going to get that reversal off these lows instead, if we do come down here. Did it hit its golden pocket as well? Yeah. We dipped a little bit past it, almost tapping the 786. But yeah, we held our full body acceptance levels off of this, the golden pocket level here. Now we're still coming down. This little demand zone, this previous little zone here of interest that could induce some range bound activity before continuing down or reversing. But yeah, ultimately we want to prepare for longs down here. But we could pull a fixed range volume profile based on the local price action from here to where we currently are. That way you can be aware of potential key levels that could induce support or resistance. So if we do get our long position here, we'll have to watch the value area low as a potential barrier of resistance. Good morning, Brett. How you doing, man? Can you look at XRP? Yes, look up XRP, man. See how it's going. XRP, August 1st. So we looked at this a few days, like 4 days ago. We had our, what's this key level drawn on for? Oh, see, okay. We were looking at this low time frame descending broadening wedge here with the technical target. Let me just close this, of just like around here, but it never got that confirmation. And we instead used our key level as resistance and came down and induced a downtrend after losing this valley area. So basically, this high ended up becoming the confirmation level after we got this lower low, telling us that we are using this valley area as resistance. Oh, my bad. Let's move that. This never confirmed either. Delete this noise. We come down to this demand zone over here. Yeah, it has price action wise a little bit more. With it still a bottom reaction compared to Bitcoins, I would much rather have traded XRPs because posture is a little bit more bullish. And we can see that it outperformed Bitcoin quite a bit too. It had relative strength against Bitcoin. Bitcoin, it had a slow crawl up and made it to a previous small valley area. XRP had a stronger deviation away from the valley area, so it had relative weakness at the first point, but its recovery was pretty strong. Now we're building like this ascending, like head and shoulders behavior, a little bit of Batman vibes, So if we end up breaking this low here, could potentially see that break of structure continuation. And they can use a measurable target to help you as a guide alongside by watching key levels of demand along the way that can induce a reversal. We've got a little guy here. Yeah, a little guy here. But pretty much at its measurable target, you're going to be watching for a potential bullish reaction. If we manage to break that low, the bullish case scenario is if we get acceptance into this valley area right here, which we've been lacking to do, right? So we need to see basically that price action to get inside the valley area, get that break of structure, higher high. You need to start targeting the point of control. If we breach past the point of control, then you can extend your target to the valley area high at 319. But I'll be treating this area quite seriously. We have this wick high where liquidity could be resting above it. We have that in confluence with the point of control itself. And if we do breach past it, it might be short-lived from this local high here too. So just be mindful that there's some confluences at the point of control that might prevent it from going further. And it might help us to go range bound in here a little longer before continuing to go up. That's the bullish case scenario. Hopefully Batman doesn't knock it down. Hey, Cal, can we look at ADA? Another day of a Trump dump tweet. Let's take a peek at that really quick. X. What is Trump tweeting about? The 5th. He's got a lot of pinned stuff. Try 4th. I'm not seeing anything here, man. It might be on Truth. And sometimes you'll post on Truth first. Let's look at Cardano. Cardano, pretty much doing what we expected. right? We had us hit this value area high. We had a key level here that could induce a drop, but we were worried about this point of control inducing a range, right? Between this value area high and this point of control. So we did flip bearish. Then we flipped back to bullish shortly afterwards. No, that's internal. But yeah, so we got that range bound price action that we kind of predicted. We just need to. This is what I mean by like Cardano being a little slippery fish. Sometimes it starts these trend bound moves that last a long period of time, but trying to get in on them, if you're not in on like the clear entries and you're trying to get on in late, it tries to knock the late people out all the time. We lost the uptrending momentum internally here, used it as resistance. We got that lower low, break of structure continuation. That could have been a potential front run to the break of our key level that we are talking about. And we got the bounce, went straight to the value area high. And now we're coming back down to our point of control where we can prepare for support again. We just got to wait for that confluence-based movement with Bitcoin coming down to its uptrending momentum and this buy wall and our little demand zone here. We find confluence there for our support. Cardano is very likely going to find support at this point of control. We might even get an SFP. I've never done an SFP trade on Cardano before, so I'm not sure how reliable it is. But if you are someone who has and you know it's reliable, then you could potentially get that SFP scenario as well from here. If not, maybe from a local one or this double bottom change character reaction that we're kind of hoping for. But yeah, that's Cardano. It is trying to inch its way out of this downtrending momentum here. And we breached past it here a little bit in the lower time frames. How we look on the higher time frames, however, like hourly, we breached it. 4 hour, we're like barely getting acceptance out it. We could easily move this trend line a little bit. That's why you don't really take action on trend lines. You investigate based on trend lines. Like you look at the order books, you look at the confluences. All right, cool. All right, so that is Cardano. Not much more to it than that. We're staying above our 200 and our 50, which is nice. We're just getting squeezed between this valley areas, point control, and valley area high still. I would give pathing like I did yesterday, where I expect its behavior, but honestly, all I can see that's a little bit predictable based on the confluences from Bitcoin and all the other assets and their key levels is just around here. We could potentially expect a support bounce again. It's looking for a power replacement, and Peasant doesn't want the job. Yeah. I wonder why he wants to replace Powell, because he won't do what he asks. But I feel like Powell has got a little bit more experience on fucking up the economy more than he does. So I think he should keep his job. But what's your cycle high for Bitcoin? That I am a reactional based trader. I have predictions, but I will not just close my trade or close my holdings based on my predictions. I'll do it based on the reactions I get in the market. So I need to see, like, I kind of sound like a broken record when I talk about it, but I need to see like the Ripple chart, the relative unrealized profits and loss chart be in the overheated zone. And then I'll look for a daily change of character, negative daily change of character reaction while we're in there. And following those simple rules, there is other rules on top of that, but all the other rules have already been met. Like the supply being in like a 90% profit or more. We have been hovering in that for a while, between like 80 or 73, sorry, 73 and 100 since we've been at 62K, right? A large amount of people have just constantly been selling their gains, and they've been bought up from institutions, and it's creating stability in the market. This is why we've been ranging so much, because retail's been exiting and institutions been buying. So we've been ranging these long-term ranges for a long period of time. So I'll use supply and profit and losses. I'll use the NUPL chart. I'll use the relative unrealized profits and loss chart. And this is the one that has not been meeting its rule yet. And then we just need the change of character reaction when we get in there. So it all depends on what the price is when we get up there. It could be at 200,000. It could be at 400,000. And we don't technically know. But when it gets there, that's when I'm going to be selling my Bitcoin. So you just check on this chart like once a week, and you'll be like an expert macro holder. You'll know when to sell. You know when to buy. When do I think Cardano will hit an all-time high? Actually, we were just talking kind of about that recently. When it comes to altcoins, they usually hit their all-time highs. Now, there has been some unique cases this cycle with some assets having really strong relative strength through market absorption from their competitors, like Sui, for example, taking from Ethereum's liquidity pools. But like when we get into the overheated zone, the true altcoin season usually starts after we range within the overheated zone, because people are pulling their profits from Bitcoin into alts during that period. It first starts from Bitcoin to network tokens, then to the assets built on those networks. And Cardano, I believe it will hit its all-time high when we see that range-bound price action up here. It might have a white swan kind of event based on its involvement right now in the government, where it might get there sooner. But in a predictable format that we've seen consistently, I would prepare for it to reach its all-time high when Bitcoin gets up here in the overheated zone, when people start migrating their funds from Bitcoin into network tokens. So that's the more predictable way of preparing for it. We do have structural evidence on how you can prepare for it too, without using on-chain data. Like you could use a formation like this, for example, to dictate probability of us reaching like this high. And then from there, you can start making, you can find out what the momentum is, right, through breaks of structure. And that will give you an ETA as soon as you get that break of structure breach of how long it might take for us to get there. So we don't really have any structural evidence yet of when we will reach our all-time high for Cardano. But other than that, you could use a tool like this to help you predict it, man. I hope that helps you out. But my answer is I don't know. Like, I'm not gonna pretend I can see the future, but I know what the tools I can use to help me prepare for calling the top, if that makes sense. What is your Fib settings to get the 25 and the 50% from the valley areas? Let's go over that together, because that's really helpful for valley area trading. So let's say you're wanting to find out the deviation of this valley area. You'd first do your Fib pull from the valley area high to the valley area low, like this. And you can use these levels to help define key levels that normally induce a reversal or give you warning signs that we might be leaving the valley area. So like the 25% level deviation and the 50% level deviation usually give really reliable support and key levels for reversals. But how you get the settings, I'll let you screenshot that. Basically, you want to type in like your 0 level, your negatives are 2.5. This represents the 25% deviation of the low, and 0.5 is the 50% deviation of the low. And over here, 0.5 without the negative in front of it is the equilibrium point, the center point right here. And then we have our 1, and then we have our this represents the high, and then we have the 1.25 and the 1.5. And these represent the, the 25% high, the 25 and the 50% high. So you can mark those any colors you want to help you with your psychology. The levels need to be switched from values to percentage, and that's what you'll get the percentage-based movements from. Now, you could technically do this with levels. It won't make a difference as long as you know in the back of your head that this is based on percentage deviation, because that's technically what the Fibonacci tool is. It's just telling you percentage-based pullback, right? It's all based on percentages of the from the high to the low that you pull. It's relative to your pull, right? So that's what Fibonacci is all about. So I hope this helps you out. Just screenshot this and you're set, man. I could make a lesson on this inside the course too. Okay. Hey man, how you doing? He placed Powell there. DT continues to screw around the entire economy with tariffs, trade wars, and well, yeah, we're kind of in a financial war right now. Well, at least Canada and the U.S. and obviously China is involved a little bit too. But yeah, what the tariff stuff is really messing up some stuff for sure. And they think that it's not being passed on to the consumer or the people, but you have obviously retail being reactional to the tariffs by increasing their prices, sometimes even before the tariffs are even implemented. So pretty annoying. Do you think Bitcoin will roll over? Like I think it's possible that we could break through this buy wall here and fall down to 112 again. Do I think that we'll break past 112? I don't think so. Not this early. We tapped into it barely through here. We had to fully mitigate this level for me to start to feel like we could roll over. We'll have the confluence of breaking the momentum that's been holding us up since what was the price point again? Sorry guys. 76K. Okay, so we have evolving momentum there. When we lose momentum, it doesn't mean we're going to drop though. It does mean though that we should prepare for either range-bound price action or that continuation down. But yeah, definitely increases our probability of a drop. But if we get down here, and we have this active resistance, then yeah, I think we'll roll over from there. But we need to see this fully mitigated first. Which means discounts. What if it just deviates more than 50% and you draw a new value area? Thanks. Not necessarily. So I draw a new value area when we have certain market structural based rules or when we're in an area of evidence of a previous value area. So if we, for example, come down, let's just visualize a bearish case scenario where we come down, we consolidate, we drop, and then we have a change of character reaction. At this point, you could pull a potential value area from here to here, but it'd be a very, very young value area, and you'll be assuming with or without the value area, when you have a change of character reaction going towards a newly created supply zone, that this is likely going to be the range high, and we hit our head off of that. From here, when we have our bearish change of character internally within this range, we then confirmed a range. And at that point, you can have a reliable fixed range volume profile pull. But a deviation away from a value area, it's just like you can create rules. Like, for example, seeing a confirmed break of structure off of the value area, telling you that we're going to be leaving that value area and moving to a previous one or going to leave to create a new one. So that's kind of like one rule I would look at for preparing for a new value area, and that we're leaving this one, and you should stop your pull at that point. But yeah, this is what I kind of look for when it comes to creating a new value area, fixed range volume profile pull. The bullish case scenarios is kind of the same. impulse move up, build base, impulse move up. Bearish change character, assume this as potential support with your target for your change character reaction. But if this is all happening at a previous value area, let's say there's a previous value area high over here and like a previous value area low over here, then you don't really technically need to do your value area pull until we start taking over that value area. And then you can use that new data to take over the previous data because it's pretty much going to be the same, but you want to have it based on the relative price action and not just the historical one. So I hope that helps you out, man. But that's, yeah, what I look for. The deviation is just about helping you with the probability of a return to your value area. So around like 25% and the 50% levels are the two levels that normally provide like the best, the higher probability returns back to the value area. When it starts to deviate further, then and especially if you see that break of structure outside of it, then yeah, then you can start preparing for move down. Like here, for example, we never got that, right? We needed to have a close below this wick in order for us to get that confirmation. Whereas here, I know it's small, but we did get it here. So once you breach past that percentage-based deviation, then you can kind of assume, okay, we're going back to a previous value area. If you look at the hype chart, I want to find a position for re-entry. And I personally don't see a clear sign to do so. Let's find out, man. See if there's anything that's transparent. So last time we looked at was August 1st. Okay. Building a bit of a bear flag posture. And we did break above our horizontal level of resistance here with this uptrending momentum, holding up the price. We got below the 50-day. Where's the 200? 200 way down there. Okay, so yeah, it's been sprinting like crazy, right? Plus, it's just been newly created. The Hyperliquid. So Hyperliquid's been on a tear. It's had some relative strength. It brought to a new all-time high recently. So for it to have some relative weakness right now is pretty damn common. Let's see. Are we done all that? So we're holding off of this previous value area high. Oh, 1 second. Undo that. Delete. There we go. So yeah, we're holding off of this previous value area high data right here. And we're kind of breaching into this valley area, getting ping pong between this valley area and this valley area here. And we're building a bit of a bear flag kind of posture. We're stacking liquidity from below us and taking it from above us. So our probability of coming down is higher. Now you could prepare for a bullish reaction around 36 areas or so, but if we get that acceptance into this valley area, then we can see it come all the way down to around 31, 32 level. We have these wick lows that would be great for potential SFPs or sweep for a return back up to at least this valley area high. But yeah, right now, all we have is potential short game setups, like short-term setups, sorry. We are trying to find support off of this level. But if we fail with this change of character reaction right here, then we come right back down to this uptrending point of interest. If we lose that uptrending point of interest, then we'll confirm this like kind of bear flag kind of posture. And we can come back down to these lows here. So the key levels I would be looking for like a short-term hold, if that's what you're looking for, be around here, 36.82, or if we breach past this with a break of structure and not get the change of character reaction that we want, then this will be our next key level that we want to watch. And it would be kind of nice if we swept this legacy SFP low, 35.33, based on this wick down here. So if we sweep that, grab the liquidity from below these lows, that would be the most ideal scenario, is to get something like this around this area. We roll a fixed range volume profile from the current price action. Now the bullish case scenario, if we don't get this breach of this change of character here, the bullish case scenario is we get the higher high and we hit our head off the 50-day EMA. I don't know if we'll breach past the 50-day EMA, but we do have some confluence of supply concern, like here, from this high, and right here. We have some evidence that we might hit our head at this level here, alongside the 50-day. So I'll be more prepared for being patient for this potential setup over here, bud. And you might get a short-term move around here. If I get the clone, there we go. Something like this over here. But any bears, yeah, you could prepare for the short here, but it's awkward shorting into the VWAP like that. So just be cautious of the VWAP. If we breach past it, then you'll have more confluence to help ride the price action down. And be mindful of the point of control alongside with the uptrending point of interest. You could find support there. But these are the safer plays down here. Why is a time frame point control different from the 4-hour point control? Which one is the most accurate to refer to? So the time frames used to not impact the data that you would receive from your fixed range volume profile pulls. It started doing that about 4 or 5 months ago, where depending on the time frame you're looking at, the data would fluctuate on your chart. See, I personally, the more candles I've noticed ever since, I'm calling it a bug, but ever since that bug, the more candles you'd have on your chart, the more accurate and refined it would become. So I would recommend like looking at it on the lower time frames, like the 15-minute, 30-minute, and the hourly, when you're doing your fixed range volume profile pulse, if you want more dependable key levels. Which you'll notice, if you mark your key levels in higher time frames, they're not as likely to be honored on like lower time frames, like the 15-minute or the hourly. So I'd recommend refining it by going to the 15-minute, 30-minute, or the hourly when you're drawing your fixed range volume profile pull, and then marking it with a horizontal ray. So when you alternate between time frames, you can look at it a little more clearly. That's like your value high. So we have our POC here and our value high here. So if I were to switch over to the hourly, you can see there's a slight adjustment to the value high, but no adjustment to the POC. Switch to the 4-hour, no adjustments to the POC, still only slight on the 4. It's just about, but on the 6-hour, you can see a little bit more dramatically. So I'd recommend, refining it on the lower time frames. A lot more dependable key level. Hey, Kyle, how are things? We killed an Ethereum trade over the weekend if you call. Yeah, man. Good job. You taught the community well. Some folks have great calls. Yes, I've been looking at the members section. Like we have a channel, not just for like the coaches, by the way, for anyone who's not a member, but also for people who are part of the community, also give signals to in this channel here. And yeah, some killer trades. That Ethereum one was insane. Great job, man. Really, a lot of breathing room on that. On the long position tool here, you got, and you still managed to get that. Was that looks like a more than a 1 to 2 relative to its target. Pendle. Yeah, sneak peek at Pendle. Thank you for your explanation, Kyle. You're a real knowledgeable gent. Thanks, man. Appreciate it. Pendle, let's take a peek. Open. We don't have a Pendle chart, so we'll have to look it up on here. Let's find out on Binance here. Binance, we've got on Pendle. Oh, come on. Sorry, guys. There we go. So we had this supply concern. So we have this impulse move down, built a base. We're just talking about like this is a decent example for when you can start pulling a range, fixed range volume profile soon. But yeah, impulse move down, built a base, impulse move down, created supply concern, which induced the neckline for this double bottom. We had mitigated the entire thing with this wick. So next time we come up here, it's a lot weaker. Pendle's like positioning is definitely preparing for, it looks bullish so far. We have our full body key level here. If we get a full body candle close above this, someone asked me a question recently. What's the difference between a change of character and a change in state of delivery? And this is kind of a decent example. We've got, if we get the candle close above this, that's a change in state of delivery. If we get the candle close above this, that's a change of character. And the change of state of delivery will give you that earlier entry, and they're very dependable depending on the behavior of the previous price action. And they normally come in on fast price action. So I usually have traded like this, but I never heard the terminology of it until recently. Because when I did my back testing back in like 2019 on like what works and what doesn't, I've noticed that price acceptance where the candle closes usually defines a higher probability of a reversal, and never really needed to depend on the candle closes above the wicks. And what you really need to depend on is certain mitigations like this and certain confidence levels like the VWAP, of course. So if we close above this key level here, we would have a close above the VWAP and this neckline here. But yeah, so that's what I'll be looking for Pendle. Short term, let's zoom out a bit because we're only looking at the local price action. There could be more to what we know here. So we have a valley area here. That's kind of helpful. We're currently off of the valley area low. We have the point of control. We're kind of dancing around right now. And we have the valley area high. This could be helpful for us to see a potential confluence-based exhaustion at this high. And our measurable target for this double bottom is looking like it might target this supply concern right here. So if we pull a trend line from this neckline to this low, it brings us roughly to the top side of the supply concern here. We might see continuations if we find that this value area high acts as support with a break structure. And then you can start looking left for supply concerns that will basically be your barriers to your target extension. Like this little 15-minute order block could cause problems. The 15-minute order block, I believe, what time is that on? That is at 7:45, 8 o'clock. Okay. So here, it's hard to notice, but the VWAP reset here and the previous day VWAP resets are also levels of potential support and resistance. So you can mark them on your chart. I know a lot of traders that respond off of them, and they say it does really well. I personally, I've always looked at them and noted them. Like, for example, here, you can see that it aligns really well with these previous value area low. So that confluence could be also a rule that you could use for yourself to say, I will not enter a long, for example, unless it retests a previous day VWAP. And you might also add rules like also needs to test a value area low. Now, I wouldn't recommend those exact rules because the probability of this occurring is actually kind of low, where it kind of lines up like that. But when the stars align and you're aware of it, it will help. It will help add and stack confluence to your existing rules. So this is one of those things that you just be aware of, but might not be a core rule itself. That's Pendle in the short term. Let's go to daily really quick. We did hit our head off of this supply concern that we've had drawn after we had this higher high. Did we get a local S&P? No local S&P or anything like that. But we could be coming down if we don't get this support bounce reversal off of this previous high. Might give us a short-term move up. But overall, I think based on its positioning, it's in a bearish location. This range is about 532 days. So I'm hoping that for Pendle holders that we stay above this point of control, maybe go range bound for a little bit and stay and get a good reset so we can get that continuation and maybe leave this range. If not, we stay in here and we just keep bouncing around in here for a bit, then that's also great for traders because having a range like this, it kind of gives me Caspa vibes in the sense where it looks like it's reliable swing trader / range trader setups. You can be a range trader, but have a swing trade environment because the percentage-based moves are huge, right? This is like 50% from the value area high to the value area low. Pretty wild. You really got to set alerts for those macro key levels. So you could miss out on some crazy gains. I got to start doing that for these altcoins that range like this. But Pendle might be a good one to note for macro range trading. Let's go back to Bitcoin, see how it's doing. I got about 5 minutes left, guys, before I got to head out. Got to do the community call. We break past. Okay, we're still dragging our feet. Now do we get order blocks? How do we get order blocks on chart? Posted in chat yesterday just for CoinGlass. Oh, order blocks or order books? Because you're mentioning CoinGlass. So order blocks are separate from order books. People get them confused because it sounds the same. Order blocks is structural evidence of potential residual orders, right? So if you see something like this in your charts, where you have like a doji reaction like this, and then like a fast impulse move up like this, then you can expect that this is an order block, right? And that when we come back down to it, we could find support off of it. And usually the equilibrium point is one of the most reliable points. And that's an order block. Now the order books can be used in combination to that, but it's not something you can put or layer over top of your chart, unfortunately, because TradingView doesn't allow external data to be inputted into their system. So here's the link for it, Noah. I'll put it in the comments. It's free to use, but it'll give you evidence of where buyers and sellers are resting and waiting. And it gives you a sign of confidence. So if you see that this is in line with a key level, like a value area low or value area high, or a trend line that you have drawn, or point of control, then it's telling you that there are traders that are going to be responding to that key level. It's kind of giving you an insight that your key levels are drawn correctly and other traders are agreeing with you. And then you can use those traders as a tool to protect your capital in trades or for entries, stuff like that. We do have a decent sell wall at 115K area. 600 Bitcoin. I'm close to 600 Bitcoin. 114,990. 114,990. So basically a part of this high here. We can double click on this. Not bad. There we go. And this is a good way to put it on your chart. So you mark it on your chart with a horizontal ray or horizontal lines. Change any style that you want. And then you just write out what it is, like 500 BTC sell wall. Right? And then when we approach these levels, you can either have alarms just before them or alarms off of them. So you can then be notified. It's a good time to look at the order books to see if that sell wall or buy wall is being mitigated. And if it's not, and then you see a bullish change of character reaction or bearish change of character reaction, and it's not being mitigated, then you can technically use that buy wall or sell wall as a stop loss guard, because price cannot go past it until those orders are filled. But yeah, that's how you can do it. They also have what's called a new system called CoinGlass Legends right here. It's free to use for now. I've got a feeling that they're going to start charging because the value of it is insane. But here you can see orders being created live. You can see your liquidation levels, right? So this is a great tool where you can see an overlay of really helpful data. On the right-hand side, right here is your order books. It's not as easy to read as a depth chart, but you can still see that there's interest in your in certain key levels, right? So this is pretty helpful too. All right, guys, I gotta head out, unfortunately. What's your best and worst case scenario for the bull market coming up and coming bear market? Worst case scenario, I'm thinking 150K is the top. And that would be relative to us reaching around the 1.74 RUP chart level, where we consistently had it act as resistance. So around 150K is where we'll see that kind of exhaustion. I don't think it's going to be the top though, but I'm thinking worst case scenario, if some kind of black swan event occurred around this area, we might see a top around there. But I'm thinking, man, it's going to be going higher than that. There's too much going on in the background for it not to. All right, guys, I got to head out. I got to join a community call. Thanks a lot for everyone who showed up today, for who's been sharing, liking, subscribing, all that fun stuff. We're getting close to a goal of 7,000 subscribers. We're about 200 away. Thanks a lot for all your help and bringing me to this point, guys. I'll see you tomorrow at 8:30 a.m. in hopes that we find a setup. But again, we're preparing around here for potential longs. So we'll see what kind of price action we get. But that's what we're looking for around this area right now. All right, guys. Have a great day.